What is going on, investors? Hopefully you guys are doing well out there. A little of impromptu video, a little unscripted video, but I thought this information was important enough to bring you here on the channel. And so a lot of people are tuning into CNBC, likely for some advice, some guidance and things like that. And the first thing that I want to say is, look, I watch CNBC a lot and I'll listen to it quite a bit. But the thing to understand is the vast majority of people that come on that channel are money managers. And not only are they money managers, but they're money managers for the ultra wealthy. So we're talking about multi-millionaires. Just to get these people to even take your money and invest it for you, you need multiple millions of dollars. These are people with multiple $1-million homes. They have vacation homes. They probably wear a watch that costs more than the average salary of the average person here in the United States. They probably have furniture and artwork in their house that is worth a lot of money. And so during these economic times that we're in, first of all, it's not unprecedented. It was not unexpected as well. If you've been viewing this channel for any length of time, 6 or 7 months ago, we were putting up videos about how the recession was here. The recession was going to get worse. Here were all the indicators that were going to lead to a stock market decline. And guess what? All of that happened. Now, you could pat yourself on the back, or you could start to think about what is next. And these money managers, like I said, they are in charge of maintaining these multiple millionaire clients, maintaining their wealth. These folks are not concerned about the economy going down. They're worried about maintaining their millionaire lifestyle, because trust me, folks, it is very painful to go from a millionaire back to 100,000-aire. None of these people want to do it. And all of these money managers that you're seeing on CNBC, it doesn't matter what product they had their clients in, they are down on the year. If they had them in bonds, they're down. If they had them in equities, they are down. Every asset class, including now we're starting to see real estate, is rolling over, and it's going to continue to go down. So if you're watching this video and you're a multi-millionaire, or you're a 1,000-aire, or a 10,000-aire, or a 100,000-aire, and a year from now, 2 years from now, you want to have the same wealth that you do today, well, put your money away in some kind of money market fund. I repeat, I would not be running to pour my money into bonds, because the number one bond portfolio is owned by, guess who? The Federal Reserve. And guess what the Federal Reserve is going to be doing over the next 6 months? Yeah, you guessed it. They're going to be selling their bond portfolio. The number one bond portfolio out there is going to be selling their bond portfolios. What do you think is going to happen to bond prices over the next 6 months? So yeah, good luck with that strategy if you think pouring your money into bonds is all of a sudden going to be this mega safety trade. It is not. Yes, the yields might rise, but Finance 101, when yields and interest rates rise, what happens to the price of bonds? It goes down. So if you're not holding those things to maturity or holding them for any length of time, you're going to get destroyed from a principal perspective. So if you want to pour your money into a very safe financial instrument, first of all, I don't blame you. If you're close to retirement, if you're 50, 60 years old, if you're saving up money to buy a house, maybe the retreating prices in the real estate market has you excited about maybe being a first-time homeowner or upgrading your house, well, put your money in the bank. Put your money in your mattress. Don't get into equities. Don't get in the stock market. But those of you that are watching this video and you want to turn yourself from a 10,000-aire into a 100,000-aire, you want to go from a 100,000-aire to a millionaire, you want to go from a millionaire to a multi-millionaire, well, folks, this is the time when you start to take risk. This is when you start to look at these equity markets, and you don't look out to the next rate hike. As so many people comment on my channel, I'm looking out to the next 75 basis point hike. Well, that's already priced into the market. What you need to start thinking about is, what are rates going to be a year from now? What are rates going to be 2 years from now? What's the economy going to look like this time next year? What's it going to look like 2 years from now? And if you're completely negative on those types of things, you think things are just going to completely fall apart, and somehow magically the Federal Reserve is just going to tank the United States economy and the world economy for that matter, and just continue to do it without reason, and they're just going to continue to raise interest rates at the Fed, even though there's a lot of statistics out there. If they raise interest rates just a little bit more, it effectively bankrupts the United States government. If you think the Federal Reserve is going to go that far, well, give me some of that stuff that you you got in your pipe, and I'd like to smoke a little bit of it too. There's absolutely no way they are going to go that far because their bosses, quite frankly, will get them the heck out of there. Are we in for a rough patch? Are we in for probably at least the rest of the year? Equity prices probably continuing to trend down. Sure. Are we looking at another 10, 20% decline in the equity markets? Sure. Well, folks, look, becoming a millionaire, becoming wealthy, nobody ever said it was easy. Nobody ever said it came at a cost. If you can't buy equities or start to buy equities with the realization, maybe they go another 10% down, maybe 20, maybe even 30% down. If you can't suffer those types of losses, well, there's no way you're ever going to reap the benefits when they go back up. Everybody on CNBC is going to be late to tell you get to back into the game. They're going to be late to tell you, oh, this is the bottom. They're going to wait for a rip your face off rally, 20, 30, 40% to say, whoa, okay, I think stocks at bottom. Oh, well, now all of a sudden the Fed has started to cool down on interest rate hikes. They're going to be late to that party. And that, quite frankly, is going to be your greatest opportunity over the next 4 to 6 months. Many of you that have been watching this channel know that 6 and 7 months ago, I was posting regular videos here on the channel saying, well, all of this stuff looks really bad, guys. I think the stock market's going down. Other YouTubers, other financial YouTubers would come to my channel and say, I shouldn't be so bearish. I'm too bearish. I've got too bad of an outlook. This was 6 or 7 months ago. Now, guess what those people are saying? Oh, it's too early. You're too bullish. You're way too bullish. You're getting back in the stock market at the wrong time. You're being reckless. Well, we'll see who has more money over the next couple of years. If anybody that puts their money in a 4% yielding instrument, 5%, whatever it might be, we'll see who has more money. The people that play it safe or the people that take the risks. Which one are you going to do?